Good afternoon. We would like to present our team research. And let's begin from the business description. Magnit is leading retailer in Russia by sales. The company was founded in 1999 with headquarters in Krasnodar. It is the holding company for a group of companies that operate in the retail under the Magnit brand. Magnit operated as a public company for 9 years. This company has different kinds of markets, such as convenience stores, hypermarkets, cosmetics, and family stores. Because of this commercial multi-format network, further expansion is simpler and gives the ability to quickly react to changes in the market conjuncture. Magnit holds a stake approximately equal to 6% of the food retail market in Russia. Average customer traffic a day is more than 10 million people. The company employs more than 260,000 people. The average monthly salary equal to almost 30,000 rubles, with a constantly wage growth. In accordance with the reviewed consolidated financial statement for first half year 2015, Magnit had an EBITDA of 49 billion rubles. Magnit's local shares are traded on the Moscow Stock Exchange and on the London Stock Exchange, and it has a credit rating from Standard & Poor's of BB+. By the way, Magnit is one of the Russians' few truly public companies. Its head, Sergei Galitsky, owns 40% stakes and 57% of the market is in the free float. Combined with transparent and effective financial management of the business model that takes the stock extremely attractive for the large institutional funds and private players. So now about management. Under Galitsky direction, Magnit is developing rapidly. Company has won the award for the company with the best corporate governance in 2011 and 2012. He maintains active role in forming the company's strategy and further direction of activity. The general shareholders meeting is supreme management body of the company. The company has built an effective system of the corporate governance and internal control over financial and economic activity to protect the shareholders' rights and legitimate interests. The company has established the zero-tolerance policy toward corruption in all its forms and manifestation, which means a total ban for members of the management bodies of the company. In August, Forbes awarded Magnit 23rd top 100 innovative companies in the world, and the retail has become the sole representative in Russia in this list.
It's now I want to tell about industry overview and competitive position of Magnit. Today, due to crisis, retail trade sector decreased demand. The retail trade sector comprises establishments engaged in retailing merchandise, generally without transformation and return service incidental to the sale of merchandise. The return process is the final step in the distribution of merchandise. Retailers therefore organize to sell merchandise in small questions to the general public. The sector comprises two main types of retails: store and non-store retails. Store retails operate 5 point-of-sale locations located and designed to attract a higher volume of walk-in customers. In general, retail stores have extensive displays of merchandise and use mass media advertising to attract customers. Non-store retails, like store retails, and organized to serve the general public, but the retailing methods differ. Now, I want to tell about Russia Magnit. This report forecasts beating Magnit profit rise. Russia budgets for retail Magnit said on Wednesday its core profit margin declined slightly in the fourth quarter compared with a year early 11 interest beating analyst forecast. The company Russia top grocery chain by sales and number of stores also reported a 30% rise in the net profit to 50 billion rubles, while analysts expected a 10% drop to 12 billion rubles. EBIT rose by around 30%, while net sales were up 70%.
Investment summary. We believe that Magnit will continue to surprise investors, primarily the ability to improve the conditions of contracts with suppliers and by benefit from significant investment in developing its own logistic network and launching new formats of stores, in particular family, which should allow to diversify its business. Based on the available indicators and predictive calculation of net profit in 2015, we estimate the upside potential Magnit about 43% to $68. However, a prerequisite for its implementation is to stabilize the macroeconomy and restore retail trade turnover in Russia. In the medium and long term, we are recommended to buy. So now about financial analysis. The company will continue actively increase its financial performance in 2015-2016. We expect revenue of $21.8 billion in 2015 and $24 billion in 2016. To improve the current level of margin on EBITDA, 11%, will be difficult, but the company has repeatedly surprised investors and exceeded projected figures. Low debt burden, lack of foreign exchange risk and fixed interest rate debt securities have a positive impact on the financial position and stability of the company. However, even in such circumstances, Magnit is steadily developing. Currently, the undisputed leader among retailers for the growth of turnover and net profit is a Magnit, which steadily increased the capitalization of the sixth year in a row. The slowdown of sales increased closer to the fall. In the first few months of last year, revenues increased by more than 30%. In November, it's only 16.95%, and in December, 16.68%. December sales have traditionally been considered an important indicator of consumer sentiment. So much weaker results is alarming. On the shareholders' basis, company shows good profitable level. Earnings per share shows a positive trend, which contributes to the further growth of the market value of shares. In recent years, Magnit shows the rapid growth of financial indicators, with an average annual growth rate of about 20%. But in the current situation in the company, we expected further growth rate will remain at 10%. In turn, EBITDA and net profit also show steadily upward trend from 10 to 11%. We expect that Magnit, due to the strong operation and financial results, will be able to maintain current levels of profitability. However, next year we expect deterioration. Firstly, because of the slowdown in the retail trade in general. Secondly, because of the substantial cost increases for the implementation of plans to expand the network.
So let's start considering valuation of the company. In assessing the value of shares, we use discounted cash flow method and a comparable companies approach. In the DCF model, we assume that revenue will maintain the rate of growth on the background of the retailer's competitive advantages. EBITDA margin is forecasted at the level between 10 and 11% in 2015. The value of the companies in the post-forecast period is determined by the Gordon model. Company's growth rate in the terminal period is expected to reach 3%. This corresponds to a realistic forecast of the growth rate of real income. According to the DCF analysis, we get very high level of share price, approximately $77 per share. To be more clear and to get more reliable results, we have forecasted share price using the comparable companies analysis. We have compared Magnit to other companies using such multiplication as PE, PS and EV/EBITDA. According to the results of the comparative analysis, Magnit properly evaluated in comparison with foreign counterparts from developed countries and are more expensive to Russian peers. However, the growth potential of value of shares compared with foreign counterparts in developing countries retained. Depending on the features used for the calculation of DCF and comparative approach, the results are more or less different from each other. That's why the final valuation of the company calculated based on the weights assigned to each of the methods. From the analysis follows that at the current prices, taking into account the existing share price, are undervalued. This growth potential is 44%, the fair value of stock is $68. So now about risks. We assume that the main risks are connected with the macroeconomic instability and negative growth of the Russian economy, devaluation of the ruble and reduced purchasing power. High level of competition in industry can lead to a decrease in market share of the Magnit and to decrease in its revenue. We reviewed the operational risk, which are expressed in increased cost, change in price of raw materials, inability to attract sufficient capital. Political instability in Russia may have a negative effect on the value of investment in Russia, as well as the value of the shares. Economic instability in Russia may have an adverse effect on consumer demand, which materially and adversely can affect the business. Financial risk. In this group, we have included the following risk. change in interest rates, foreign currency exchange rates, risk associated with the dependence on Russian banks. This kind of risk can adversely influence on the business company's activities, financial condition of the company, its liquidity, source of financing, and the results of operations. According to our financial research, we issue buy recommendation for the Magnit shares with a target price on $68 per share, with a 44% potential. Thank you.